This has been the roughest year for investing, and it might just keep getting worse. Hey guys, welcome back to my portfolio and my channel. As hard as it is to look at my Robinhood portfolio, I still wanted to give you guys an update on my account and just how much of a beating it's been taking this year. So if we look at the 1 month return, I'm down $3,700, almost $4,000 or 14.5% this month. And then the 1 year return is even worse, 21.09%, down about $6,000. Which means if I would have just sold out of everything at the beginning of the year and just cashed out and taken out $6,000 out of my Robinhood account, put it into my bank account, I could have just used that $6,000 and gone on a Hawaiian vacation or to the Bahamas, and my account would still be at where it is right now. But of course, as we know, that's the beauty of long-term investing. As long as you hold, you haven't lost anything at all. So when it comes to my portfolio, over the past probably 6 weeks or so, I have been buying pretty aggressively. Obviously, I was wrong, but in my opinion, I thought we reached the bottom. And I thought, yes, sure, the Fed was going to increase rates, but they weren't going to just keep increasing them throughout the rest of the year. So I thought it was like, in September, they're going to increase the rates. And then from there, it's going to slowly flatten out and we will start seeing growth towards the end of the year and into 2023. But obviously I was wrong about that. The Fed did increase rates a couple days ago, but they're planning on increasing them throughout the rest of the year. And that to me is saying that stocks are probably just going to keep getting worse. They're going to keep going down. We're going to go into a pretty bad bear market for the next 6 months to maybe even a year. So that being said, I'm not going to buy as aggressively as I did before. And so today I don't want to go over every single stock and ETF that I'm investing in. I just wanted to talk about some of the ones that I'm planning on buying in the future, some that I sold recently and some that I bought recently, and just kind of my plan going forward for the next few months to hopefully not see too big of losses in the near future. So the first one I wanted to talk about is Target, and I used to compare Target and Costco. They were both the best retail stocks to invest in, but this year Target has been absolute garbage. So Target is down about 36, almost 40% this year. And so I did sell out a couple more shares just to kind of prepare for the bear market and the recession that we're in. At one point I did have over $2,000 in Target. Again, like I said, I believed in it. It was a great company, a great retail stock to invest in, just like Costco. But this year it's just totally let me down. So I sold out most of Target. And I don't know if I'm going to be buying anytime soon because it might just get worse. So with Target, I'm currently down about 30%, 29%, and that's a $400 loss, which at one point I did sell shares, like I said. So at one point it was probably like a $600 or $700 loss. So I did cut a little bit of my losses with Target. And like I said, I don't think I'm going to buy back any shares with Target. Just probably going to hold these 5.5 shares for the next few years. So with that being said, I also wanted to talk about Costco. So Costco is a company and a brand and a stock that I believe in more than probably any other stock in my portfolio. The whole brand and business model is pretty genius to me, the way they price things. I could be wrong about this, but it's something that I consider to be pretty recession proof. Compared to Walmart and Target, they did handle the supply chain issues pretty well. And that's just my opinion, just based off of what I saw when I do go to the store. It seems like they're never really out of things, and it seems to be always really busy in the store. And again, that might be based off of the market that I'm in. There's a lot of soccer moms here that go spend $1,000 at Costco every time they go. So that's just completely my opinion, but I do believe this is a stock that is fairly recession proof and will hold for the next few months going forward. So my plan with Costco is I'm gonna put around probably $50 a week. Obviously the share price is too high to buy shares at a time, so I'm gonna be buying fractional shares around $50 or so at a time. And going forward, I'm gonna be putting a little bit of money into Costco. But again, I don't know the exact number. I'm not sure if it's gonna be $50 a week or even $50 a month, but I'm not really gonna be buying as aggressively as I was before. So that number could change, but Costco is a stock that I'm planning on buying for the next few months as we see some volatility with the stock market. So as of right now, I have about 2.5 shares in Costco, about $1,200, and I'm down 7%. So over the next few months, I'm going to be working on bringing that average cost down and increasing that market value. So this next one I wanted to talk about, it's another that I plan on averaging down, bringing that average cost to a really low price as the market goes down. It's SCHG. Obviously this year we've seen negative growth, which is why this is down about 25% this year. But this is one that I'm, again, planning on averaging down and getting a really good price on, because once we do start seeing growth again, once we do go back into that bull market, I don't know when that's going to be, but once that happens, I should see 20% growth year over year with this this fund, but we don't know when that's going to be. So I'm planning on getting a good price on this one, averaging down, dollar cost averaging with this, and hopefully seeing a high return within the next few years, because I am planning on holding this for a while. And since this share price is getting lower and lower, it probably will end up going into the 40s, but since it's in the 50s right now, I'm going to be adding a few more shares at a time. Just like Costco, I don't really know how much yet, but probably a couple times a month I'm going to be buying a few shares of SCHG. And so when it comes to dividend paying funds, I am going to add more to the monthly dividend paying stocks and REITs and ETFs. That way, if the market does continue to go down 10+%, I'll hopefully still be getting those monthly payouts every month. So I'm still getting some type of cash every single month being just automatically added to my cash position. So with that being said, I still wanted to add to my monthly dividend paying positions. And so over the next few months, I'm going to be buying O Realty and SPHD. So with O Realty, I currently have about 12 shares, $800, and I'm down about 9%. And so I'm only getting about $3 a month currently from O Realty. But as we're going into this bear market, I'm going to be adding more shares to O Realty. And hopefully as that share price goes down, the dividend will go up. And I'll be getting those dividend payments every single month, despite what the stock market does. And then with SPHD, its current price is about $41, and I'm down 7%. I have 32 shares or $1,300 in SPHD, only getting about $4 a month, kind of like O Realty, just a couple of dollars at a time. But I will be adding more shares to this fund, and it does look like the dividend is going up as well. And like I said, I'll be adding more shares to this fund, increasing that dividend payout every single month going forward. So this next one I wanted to talk about is RSG, and this is one that I've mentioned in some of my other videos, but it's another one, in my opinion, that I believe is a pretty recession-proof stock. So this is basically just a garbage company, very similar to Waste Management. They have the garbage trucks that come and empty out your garbage every single week. And the reason why I believe it's a recession-proof stock is because there's always going to be a need for garbage removal. So this is a company that can't really be wiped out in a recession. I do think the prices will come down for a stock like this over the next few months. So this is something that I'm planning on buying and averaging down and holding for the next few years to come. So yes, with a stock like this, it will probably get brought down with the rest of the stock market, but it's not something that I believe will dip 30-40% like some of these other stocks. It's a business that always has a high demand and again, won't be wiped out like some other companies will. So with this stock, I actually should move it up the list a little bit because it's going to be a lot higher of a priority when it comes to buying stocks. So there's two stocks that I'm actually planning on buying here in the near future, and it's two of the most popular stocks on the New York Stock Exchange. It's Apple and Microsoft. So I've been wanting to buy Apple and Microsoft for a while, but I do own XLK, which is the Technology Select ETF. It's my biggest position. I have about $5,000 in XLK, and XLK, the ETF, owns both Microsoft and Apple, so I haven't really had a need to buy either stock. But it looks like, at least with Apple, it's been the leader in the tech industry. People are still obsessed with Apple products, so this is a good time to buy more shares of Apple and Microsoft going forward here in the near future. I've always wanted these two stocks in my portfolio, so I was thinking, this is probably the best time to buy them. So as you guys probably just saw, I'm only really going to be focusing on a few different funds at a time right now. I'm not going to be as aggressive with buying. I'm going to be kind of tightening down a little bit and not buying too many shares of these funds because we don't know what the market's going to do. These are kind of times where we don't know exactly what's going to happen. The Fed's probably just going to be increasing rates, and as we've seen, every time they increase rates, the stock market just tanks. And so like I said, I'm going to be tightening down a little bit and adding more to my cash position. That way, once we do go back into a bull market and we start seeing growth again and inflation comes down and everything economically just becomes normal again, that's when I'll use that cash position and start feeding it back into my Robinhood account and then eventually get to $100,000 in my Robinhood account. So here in the short term, I'm going to really try not to lose too much money. I'm going to try to strategize and make it so my account is still pretty solid no matter what the market does and what volatility we see. And so no matter what happens, I am going to try to keep updating you guys on my Robinhood account. So hopefully you can stick around and I will see you later. Bye.